good set of numbers, but if you see, the highlighting factor here was the EBITDA and EBITDA margin, because if you see, the revenue growth was only 8% for the company, but EBITDA was up 20% and margin were 38% versus 35% last year. Now lower other expenses have actually aided EBITDA and EBITDA margin, and the net profit, if you see, net profit is up almost 85% for the company. But here's the catch, net profit impact was led by higher other income and lower tax. Now what is this higher other income? The company agreed to sell its Thane land lease and the buildings on it, of course, which originally belonged to Pfizer, but they plan to sell it to Zoetis Pharmaceutical Private Limited, and the sale price was almost 264 crore, and company had already received almost 52 crore in advance, but the remaining portion of around 170 to 180 crore is the other income that the company has has been focusing on, or that's the other income lying in the profit and loss, and that's the reason you're seeing huge impact in the net profit. A lower interest cost also aided net profit for the company. Now there was this news in the morning with US Pfizer and Chinese biopharmaceutical deal. Will that have an impact on Indian Pfizer company? The answer is no. Why? Because if you see the export in FY24, the export stands at around mere 4% for the company, and there was no related party transaction with Pfizer US. So no impact when it comes to the agreement between Pfizer in the US and the Chinese biopharma company, because since this is a licensing agreement, Pfizer US will be selling this product in China only. But because the name is attached Pfizer, that's the reason, maybe because of all those sentiment, maybe one of the reasons why Pfizer has Pfizer is buzzing. But the other reason is strong Q4 numbers and strong portfolio when it comes to the oncology products for the company, and of course the neurological products.
Okay, so that's Pfizer for you, Dharmesh. Thank you so much for that, Varsha. Dharmesh, coming to you quickly with regard to a Pfizer, how do you view it, and how do you view the broader sector, because you're starting to see pharma numbers come through? So what's the sense like in terms of numbers? What themes are you liking? What's your key takeaway?
So the numbers have been pretty there on the line. I mean, Pfizer, if you look at the numbers, were excellent. And as you pointed out, that 3% kind of an operating margin, plus was mainly because of a better product mix on oncology and neurology. So those are high-priced products anyways. But if you look at, the entire MNC pharma space, so there's an Indian pharmaceutical companies and then MNC. So there, the other factor which is playing out for Pfizer is the better growth numbers and the relative comparatively low valuation multiples. So if you compare this with, say, a Sanofi or AstraZeneca, is far cheaper to that, even for that matter, GlaxoSmithKline. So it's trading around 10 to 15% discount to that even. Having seen all this in light, and US tariff saga on pharmaceutical being played out separately, so my sense is all these MNC pharma companies will be benefited, because anyways this tariff is about to come. It will definitely come, maybe 5%, 3% or whatever is the impact, but it will be there. And these companies can get protected because of their parentage being outside India. So that's one thing which is playing out. It's a momentum trade. Other than that, for India pharmaceutical companies, say for example, Aurobindo Pharma or a Sun or a Cipla, would like to wait and stay out for some time till the clarity emerges on the entire, phasing of this tariff on the pharmaceutical products.
Okay, and what about you, Kush?
Well, I think at the moment this is a book profit kind of a scenario on Pfizer. I mean, there are more than a couple of factors pointing out that there could be some resistance. As Dharmesh said, this momentum trade has been building up for some time, but a very strong up move today. Now resisting at the 200-day moving average. So that's the first one. 50% retracement resistance also acting upon it. It's already overshot in the overheated territories on the RSI parameters. As I said, a few more factors going for it. So all in all, I would suggest if you have a position, it's not a bad idea to book some profits and take some money home. If you are looking for an entry point, then I think a rather decent one comes in close to the 4,800 mark, where you've got some support zone, and the stock could once again rebound and rally higher from there. But for now, you could consider booking profit partially, if not fully. So Pfizer, no initiation at the moment, and if you have a position, at least consider booking partially.